Hey everyone, this is Scott here again with a brand new video to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And welcome to my next episode of my live option trading series where I show you all the trades and all the adjustments I made this past week. And this week definitely kept the theme going from last week and the week prior to that, where we are pretty much seeing nothing but a lot of selling in the market right now. And so in this video here, I'll be talking about and showing you the importance of having very good trading defense. And then also I'll be talking about the Federal Reserve's decision, which was on Wednesday, I believe, to not change interest rates at all for the time being. And so I definitely have a lot of commentary on that I'll be sharing with you, along with my general outlook and opinion for the market in 2022. And then finally, towards the end of this video, you'll see a new trade I put on in Airbnb, which unfortunately isn't going too well right now, given, again, all the selling that's happening in the market right now. Now, as always, before we dive in here, in case you are brand new to the channel, I just want to let you know that you can also find me on Skillshare as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for Skillshare using any of those links, you'll get a full 1-month free trial. Okay, so briefly here, the first thing I want to show you in this video is this chart up top. This is a chart of QQQ, an ETF that tracks the NASDAQ. So I'll go ahead and zoom in a bit here. And so in particular, the NASDAQ has been the one that's been getting hit the hardest. Right, of course, the S&P 500 is down too, the Dow Jones, Russell 2000, everything is down. But again, tech stocks in particular with the NASDAQ, these stocks are just getting absolutely slaughtered. And the very interesting thing, as I'll discuss later in this video, was on this day right here. This was the day where the Federal Reserve came out and said they are not going to change interest rates, at least for the time being. And in my opinion here, one of the main things that has been keeping the stock market afloat and hitting all-time highs pretty much every other week has been the fact that the Federal Reserve has kept interest rates at near zero. But obviously, as you can see here, that decision to not change rates is clearly not having the desired effect. Right? I would not be surprised at this point if we came all the way back down and retested the lows from this candle, which I believe was on Monday, and that's when pretty much all hell broke loose. You know, people were panic selling and getting blown out of their positions, and the market was just melting down. So bottom line here is I do think that we are in a very interesting time right now with the market. It definitely seems, at least so far, that the Federal Reserve's manipulation in the market and with interest rates is no longer having the desired effect that it has been having for the past 2 years since the bottom of the COVID crash. So that's why in this video, I wanted to make an effort to highlight the importance of having good trading defense, because in times like this where the market is just melting down, and if you have a lot of bullish positions on, and you don't have good defense for those positions, you could lose a lot of money or perhaps blow up your entire account. And so with that being said, I'm going to stop here and play a few clips that I recorded throughout this past week that again will include my discussion on how important trading defense is, especially in times like this, and then also show you some new trades I put on and my commentary on what the Federal Reserve decided to do or not do with interest rates. So let's get started. All right, today is Monday, January 24th, and wow, what a crazy Monday this was. It was basically a less severe version of the Black Monday crash that we saw back in 1987, because today the bottom of the market completely fell out, and pretty much all the stocks within it crashed by a huge amount. And in particular, tech stocks were once again hit the hardest, as they have in the recent past, both last week and the week prior to that. So what I'm showing you in this chart here is QQQ. This is an ETF that tracks the NASDAQ, which is mostly tech stocks. And so I'll go ahead and zoom in here a bit. And so today in particular, with this huge candle, this is what I'm talking about. So the NASDAQs and most stocks in particular had a gap down opening, and then the market continued to slide lower and lower and lower until, in this case for the NASDAQ, got to being down by about 5%. And then miraculously, everything completely reversed and recovered, and most stocks actually ended up in the green for the day. So this was basically one of the craziest moves I've seen in a long time, both in terms of the drop down lower, and then also in the same exact day, basically in the last 2 hours of the market, everything completely reversed all the way. Now, of course, even in crash scenarios, there's always at some point going to be a bounce, and that's what I've been kind of talking about and hoping for in recent videos. So I'm not surprised that eventually things kind of bounced and recovered here, but I was definitely surprised that it all happened in one single day. And so at this point, I personally do think, at least for the short term, the selling is over. Typically on a Monday like this, when stocks go down by a huge amount, Especially after a series of down days beforehand, this last day is typically the final day of exhaustion or capitulation in the market. Right, today was basically a day where a lot of people were panic selling or getting blown out of positions, and everything was kind of just falling apart. But honestly, who knows what's going to happen over the course of this year? I do think we're now in a more different kind of environment now that the Fed is going to have to be raising interest rates. And again, in my opinion, I do think tech stocks and most equities in general are grossly overvalued. So perhaps we might see more of a long-term correction in the market. And then also, of course, along with this final day of just exhaustion in terms of panic selling in the market, if we come over to the VIX futures chart /VX, and again, in case you're not aware, the VIX futures will show you the implied volatility for the S&P 500. And this is basically a measurement of fear in the market. And so in more normal markets, when things are kind of just grinding higher or nothing really is happening, most of the time you'll see the VIX around a level of perhaps 18 or 16, somewhere in there. But today, at the peak of the selling pressure, basically at the bottom of the market, the VIX got all the way up to a value of about 33%. So this is actually a very, very high level for the VIX. You almost never see it getting this high except for in more crash-like scenarios like what we're seeing here today. And also, as I've explained in previous videos, when the VIX does explode like this, you will also see option prices explode across the board as well. So if you have any options selling positions on currently, so that includes credit spreads or iron condors, cash secured puts, covered calls, things like that, chances are in moments like this, you're going to lose a lot of money. But in those cases, it's important to keep in mind that those are unrealized losses. And also, when the VIX does get to around 30% or higher, it almost never hangs around there for very long, right? As you can see in this chart here, which right now is showing you the past few months, every time implied volatility gets to a peak, or basically after it spikes, it always comes back down to a more normal level. And therefore, that's also going to bring option prices back down along with it. And so until we do finally see a contraction of the current level of implied volatility, and actually so far it has come down quite a bit since the high, now at around 28%. And of course, that's because, again, the market totally reversed today. But again, until the VIX comes all the way back down to perhaps a value in the low 20s, then any existing positions you have on right now that involve selling options, chances are you're going to be underwater on them for a little bit while longer. And I'm definitely no exception to that. I certainly took a lot of heat today and lost a fair amount of money, but again, most of those losses were unrealized losses because implied volatility did explode so much. And then also I had a few unfortunate cases where for some of my positions, the stock was bouncing through my short put strike quite a few times today, and therefore I had to repeatedly short and buy back the stock as part of my strategy, and those losses did add up a bit today as well. So essentially, to give you an example of that, let's go over to the Nvidia chart, NVDA. And so as you can see here on the chart, a very similar story. The stock opened down lower, fell down by a huge amount, by almost 8 or 10%, and then recovered all the way back. Now my position on the stock, if we come to the trade tab, is, as you can see right there, it started out as simply a short put option at the 220 strike. And with my particular strategy, whenever I sell a put option, and if the stock falls below my short strike, at that point, I will short 100 shares of the stock to cover the contract. And so because Nvidia got down to a price of 210 today, then of course, while it was below 220, I was holding 100 shares of the stock short. But like I was explaining earlier, there will be cases sometimes where the stock is bouncing through your strike before it finally goes down lower. And that's unfortunately what happened today with Nvidia. So I had to repeatedly short and buy back the shares many, many times. And each time that happens, I will do so for a small loss. And that loss is usually about 70 or 80 bucks or so. But since Nvidia bounced through this put strike about 8 times today, I did lose a fair amount of money. So of course, that's certainly annoying, but it's definitely not the end of the world because I can simply make an adjustment to the position to take in additional credit. So initially I sold this 220 strike put option for about 800 bucks in credit. And unfortunately, I did lose most of that credit today. So that's why I sold the 242.5 strike call option. Now this call option has increased a little bit in price since I sold it because Nvidia did reverse pretty hard at the end of today's market. But at the time when I sold this contract, I sold it for also about 800 bucks in additional premium. So that's great. Even though unfortunately my initial starting credit on the trade was pretty much wiped out today, I basically reset and now have a fresh round of 800 bucks in credit again. Now, of course, the caveat here with doing this is I now have a different position on. I no longer have a short put option, but now a short strangle, and it's a bit narrow here, but that's simply what I had to do to save the position. And so with Nvidia closing today right in between my short strikes, at the moment, I'm totally fine on this position again. But like I was saying, tomorrow I do expect to see perhaps a pretty big rally. So if Nvidia does blow through my call strike now, at that point, I will buy 100 shares of stock to cover the call option. And then also I did make a similar adjustment in my Docusign positions. So we'll take a look at that, DOCU. So with this trade, also in the February expiration cycle with 25 days left to go, this trade started out as a short strangle where I am short still the 115 strike put option. And then also I was short the 160 or 160 strike call option. And then again, very similar story here with this position. Docusign opened below my put strike because the whole market was down, so I had to short the stock. And then of course this thing recovered and went all the way back up to about $122 per share. And so when that was happening, again, I did lose a fair amount of money from having to short and buy back the stock. And that's why I rolled down my call option to take in additional premium. So basically I bought back the 160 strike call option and did so for a profit, and then sold a new call option right here at the 131 strike and took in an additional about $300 or so in premium. Actually, I think it was more along the lines of $380 in additional premium, but you get the point. And now once again, the stock is in between my short strikes, so at the moment, nothing I need to do here, but if the stock does continue to move and either go past my call strike or reverse and go back down below my put strike, then at that point, I will have to do something, either short the stock again or perhaps buy it to cover the call. Either way, the whole point here of what I'm doing is I'm trying to sell options on stocks with high implied volatility. So therefore, I can sell those options for high prices and just try to hold on and keep as much of that premium as I can. So of course, it's ideal if I sell an option and simply the stock never touches the strike. That's great, but most trades don't actually work out that way. Right, most trades do require a little bit of defense, and so that comes in the form of either shorting or buying the stock, and then perhaps making adjustments to take in more and more premium if I need to do so. And then finally, one more thing to mention here in this clip. So we'll go back to the charts and then go to ABNB. This is Airbnb, as I'm sure you can guess. Let me go ahead and zoom in here a bit. And so for this stock, I did open a new position today, roughly around this point near the lows of today's market. And specifically for this one, I sold a simple naked put option at the 130 strike, which you can almost barely see on the chart there. And basically the reason why I did so was, again, for my expectations here, at some point I do expect to see a recovery or short-term bounce. And fortunately, I did get that finally correct today. As you can see, Airbnb reversed a lot of those losses earlier. And so right now this position is looking pretty good, but again, that was simply the whole point of the trade. Just wanted to put on a small bullish position and hopefully be correct in playing for a short-term bounce. And then actually one more final thing I do want to touch on. If we come over now to SE, I also have a position on this stock. This is Seed Limited, basically an online gaming company. And if we come to the trade tab on this one, as you can see for this position, I am short a simple naked put option at the 175 strike. And this option is right now still super far in the money. And it was even more in the money earlier today at the bottom of the market. And so for this position, because the stock is right now below my put strike, I am also short 100 shares of the stock. And that is definitely saving my butt on this trade here. Right, as you can see, the current price of this put option is roughly around $3,000, perhaps $3,100. And my initial credit on this position was only about $800. So point being, without my defense tactics, basically without shorting the stock, I would be down by well over $2,000 on this position. And in fact, I would be down by a lot more if the market did not actually recover today. And I also have the exact same situation going on with my Roblox trade as well. So as you can see here, for this one, I'm short the 80 strike put option. And again, this one is right now still super far in the money. So I'm also short 100 shares of the stock, and that is definitely saving my butt here. So the point here, the bottom line is you always want to make sure you have some solid defense as part of your trading strategy, right? Whether you are trying to use stock to hedge any option positions you have, or if you're trying to use a different approach, perhaps just selling call options or rolling down call options, or maybe you're even using defined risk positions like put credit spreads or call credit spreads. Either way, you always want to have something in your strategy that prevents you from having massive, massive losses. right? So even though I personally believe that using naked options or selling naked options is the best way to sell options, but of course, when you do that, you have undefined risk. If you don't do anything to defend your position, you're going to have catastrophic losses in rare situations like what we're seeing now. And of course, perhaps things might recover by the February expiration date, right? Maybe on February 18th, Roblox is back to $85 per share. So if I had done nothing on the trade defense-wise, then I actually would have been fine by the expiration date. But you never know that, right? You never know what's actually going to happen with your trade between now and expiration. I've had many positions where something like this happened, and then it got worse and worse and worse and never recovered by the expiration date. And a perfect example of that would be in my former Roku positions. So one last thing, come to Roku real quick here. And so for this trade I had on, which was in the January expiration cycle that expired last Friday, but we'll go into the February cycle here. So for this trade, I had on a short strangle where the short put strike was at the 197.5 strike. So basically very close to 195 here. And specifically last Friday, which was January expiration date, this stock closed at around 150, I think $1 per share or so. So this was a case where once the stock finally committed and fell below my put strike here, it simply never recovered. It just went lower and lower and lower until it hit the lowest point by the expiration date. So again, if I did nothing to defend this trade here, if I did not short 100 shares of stock, I would have lost about $3,300. But in actuality, when it was all said and done, the final outcome of this trade was still a loss, unfortunately, but only a loss of about $330. So again, I cannot emphasize enough how important it is to have good defense with your trading strategy. Defense, in my opinion, is honestly more important than your offense because it only takes one or two really bad trades to wipe out all of your profits. So again, defense, defense, defense. All right, today is Wednesday, January 26th, and a few things I want to discuss in this clip here. Number one, today was actually the first FOMC meeting of 2022, which is basically a two-day meeting hosted by the Federal Reserve to discuss what they're going to do with interest rates. And so basically, if we come over here real quick and take a look at this Yahoo Finance page, and just by looking at the headline here, you can see that the Federal Reserve has decided to keep interest rates exactly as they are for the time being. But they're, of course, talking about potentially increasing interest rates in the near future. So once again, Jerome Powell, who is the chairman of the Federal Reserve, along with the committee, they have decided to, once again, kick the can down the road and not do anything with interest rates. And so if you were to ask me, my opinion on all this is that I'm actually pretty disappointed with the Fed's decision here, especially given where inflation is right now, right? We're basically seeing multi-decade highs in inflation, and the best way, if not the only way to fight inflation is to increase interest rates, and the Fed is simply not doing that. And I also do believe that at some point, this perpetual kicking the can down the road and not doing anything to fix some pretty obvious problems is at some point going to come back around and bite Jerome Powell and the Federal Reserve in the butt in a huge, huge way. And in fact, the actual inflation crisis that we're in right now was caused by the Federal Reserve and their printing of trillions and trillions of dollars. So the fact that they're not even trying to fix the problem that they started is not a good thing in my opinion. Now, that being said, the very interesting thing that happened today was how the market reacted to the Federal Reserve's decision. So what I'm showing you here is a chart of SPY. This is an ETF that tracks the S&P 500. So we'll go ahead and zoom in here a bit, and this is exactly what I'm talking about today. So the initial reaction off the news of no change in interest rates was actually a huge surge higher in stocks across the board. And this was the exact kind of reaction I was expecting to see given a non-move in interest rates, because typically with very low rates, that's oftentimes a bullish thing for stocks because number one, with low rates, that means money is very cheap to borrow, and that's typically a good thing or a catalyst for growth. And then number two, again, with low rates, that makes things like bonds, for example, not very enticing to invest in. So compared to stocks, which might have a much higher expected return, again, most people are going to put their money into stocks. And of course, that creates more buying pressure, which pushes equities higher and higher and higher. But as you can see here, after that big surge higher, everything completely collapsed after that. Right, the S&Ps actually finished down on the day after being up pretty darn big. The only index which actually finished up slightly was the NASDAQ. So this honestly was a pretty crazy way to totally reverse and then finish down on the day after, again, what I expected to see was a huge up day once that Fed decision finally came out. So I don't know, perhaps the market is saying here that even Jerome Powell and the Federal Reserve can no longer keep equities afloat with their 0% interest rates and their trillions and trillions of dollars of printing. So we may in fact be seeing potentially, I'm not trying to call the top here, but I would not be surprised at least if we have seen the top in the market for perhaps a decent period of time. Of course, I'm definitely willing to admit when I'm wrong. So if we just zip right back higher at some point and finish at all-time highs again for the end of 2022, then so be it. All I'm saying is I do think at some point we are going to see a more long-term correction in the stock market because the valuations we're seeing today, for example, if you go ahead and change the time frame on this chart, let's take a look at the 20-year weekly, and then we'll zoom in on the more recent decades, so right around here. All I'm saying is this huge bull run that we've seen since the bottom of the COVID crash and also the beginning of the trillions and trillions of dollars of printing by the Federal Reserve. All I'm saying is at some point, this huge run is going to come to an end. And perhaps we are seeing the beginning of that now. This is the first time that we've seen the major market indexes come down in a big way since the beginning of the COVID recovery. But we'll just have to wait and see. Although I am willing to bet that this year is still going to be a very interesting year, regardless of the outcome at the very, very end. And then also one more thing I want to mention here. Let's go back and change this to a 1-year daily chart. I did also take off my Airbnb position for a profit today as well. So like I was talking about, up until the actual announcement by the Federal Reserve, stocks were surging pretty hard and Airbnb was no exception to that. So again, keep in mind for this position, I sold the 130 strike put option, which is a bullish strategy, of course. So ideally, I was trying to wait for a bounce in the stock price. And fortunately, that's what I did get for a brief moment today. So Airbnb had a nice gap up opening and then pushed even higher all the way to about $152 per share. And it was roughly around that point where my GTC closing order got executed and I was taken out of the trade for a nice profit. And then obviously, as you can see, that was pretty much just in the nick of time because again, once that decision came out by the Federal Reserve to not change rates, and then after the very brief surge higher after that, pretty much all stocks within the market gave back all their gains for the entire day. And so I'm definitely pretty pleased with the outcome of this trade, of course. And the reason why I did not replace it with a new trade today was because, again, I just wanted to wait and see what the Fed decided to do with interest rates and then also wait to see how the markets reacted. Right? Oftentimes, these FOMC meetings are big market moving events. And so, again, just until things had their initial reaction and stabilized and I could see what the market was going to do after that announcement, until that point, I just wanted to hold off on making any new trades. So with that being said, hopefully come tomorrow, once this Fed decision is more priced into the market and things have kind of stabilized a bit, at that point, I'll feel a lot more confident with making a new trade. So see you tomorrow. All right, today is Thursday, January 27th. And as I mentioned in the previous clip, today I'm definitely looking for a new trade to replace the Airbnb one that I took off for a nice profit, I believe yesterday or the day prior. And actually, I'm going to be trading Airbnb once again here. Right, and so there actually are a few other stocks that could be good candidates for selling options in this case, but pretty much all of them have earnings very, very soon. So Airbnb is one of the very few stocks that I could find on my watch list that does not have earnings anywhere in the February expiration cycle. So hopefully that should make for a more clean trade. And so now, focusing on the price action chart here, let's go ahead and zoom in a little bit. So I do think somewhere around perhaps $140 per share is a nice support level for this stock. So let me go ahead and actually draw that in really quick. So go to my drawing tools and then click on that one right there. So just going to draw in a line somewhere around here and go all the way back a few months. And that should be good right there. So as you can see, there were many times in the past where, like I said, roughly around $140 per share held as a nice support level. And so like I explained in the previous clip, after yesterday's pretty big reversal, Airbnb got down to, once again, this nice support level. So the stock is currently at around $143 per share. It's up by about $1 today. So perhaps we are seeing another little bounce off that support level. Of course, there are no guarantees that's going to continue happening, right? As you can see in the past, there were times where the support level did fail. But at least so far, every time it did fail, Airbnb managed to get back up and resume higher above it. So point being, when I look at this, I do think there are some decent odds that Airbnb could go higher from this point. And so that's why I'm going to place a brand new trade on the stock. And it's going to be the same kind of trade I placed earlier this week. So specifically, I'm going to sell a simple naked put option, but I'll make sure my strike is somewhat far below the support level here just to give myself a bit more cushion in case I'm wrong. And I definitely have been wrong pretty often so far given what's been happening in the broader market with stocks selling off pretty much every single day. So I definitely want to be a bit more cautious here when placing more bullish trades. And so with that being said, let's come over now to the trade tab and take a look at the option chain. For this trade, I'm still going to be in the February expiration cycle, 22 days left to go. And I'm considering selling the 136 strike put option. So like I mentioned, I do think there is some nice support somewhere around 140 or 139. So like I said, to give myself a bit more cushion, I definitely want to sell a put option a bit far below that point. So this contract here has a 34 delta, so this is going to be reasonably bullish, and that's definitely what I want. And I do also definitely like the premium for this contract as well. So right now I can sell this one put option for about $650 or so. And that's because if we come back to the charts real quick one more time here, and then if we come down here and take a look at the implied volatility chart for Airbnb, let me expand that up a little bit. There we go. So this stock unfortunately hasn't been around for too long, so we are definitely missing some data. But at least you can see for what data we do have, the implied volatility for this stock is definitely on the highest end it's ever been. So right now with the implied volatility being about 70%, we're seeing an IV rank of 58%, pretty darn good, and also an IV percentile of 85%. Very, very good. So this is the main reason why the options on Airbnb are still very, very expensive for the time being. And that's why coming back to the trade tab here, I can sell an option pretty darn far away from the current stock price and still collect a lot of money. And the price here is definitely already dropping because Airbnb is pushing higher. So let's go ahead and very quickly put on this trade. And so here we go. Down below is the order. Just going to sell one contract. And for my limit price, I'll go right in between the bid and the ask. So I'll try $625. Go to confirm and send. Buying power effect is about $2,000. That's fine. So we'll go to send. And there we go. Just got filled at exactly $625. Awesome. Very nice. So now, of course, the final step here is to create my automatic GTC closing order in case I am correct on this position. So ideally here, if Airbnb can push higher, and then also, if that happens, I do expect to see a contraction in the implied volatility. That's typically the relationship between stock direction and implied volatility. And both of those things, along with time decay, will serve to reduce the value of this put option to the point where ideally I can buy it back for about half price. So down below, this is my buying order. Just going to buy back the same contract. And again, like I said, I'll try and do so for 50% or half price. So half of 625 is about 310 or so, just rounding down a little bit there. Make it a GTC order so it's always in place, and then confirm and send. All done on this trade. So there we go. At this point, my portfolio is pretty much fully allocated. I definitely have some other positions on right now that are giving me a bit of a hard time given the crazy sell-off that's been happening in the market. So basically, my main objective here is to simply manage what I do already have on, and hopefully by the February expiration date, which is in only 22 days, hopefully by that point, I can exit most of these trades for either a small profit or a small loss. And to be quite honest, if I could come out of the February expiration cycle with anywhere close to a scratch, then I would be totally happy with that. So that's going to do it for this clip, and I'll see you in the next one. Okay, welcome back. I hope you enjoyed those few clips there. And so now finally in this video, I do want to go over a few of my positions and just show you where everything is at right now. So number one, let's take a look at my most recent trade, which was in Airbnb. So let's go to the charts there. And yeah, so far 100% dead wrong on this position right now. So if you recall, I drew in, as I saw it, a nice support level, but Airbnb has decided to simply break right through it and go even lower and lower. And this behavior is definitely pretty indicative of what's been happening in the broader market, right? Typically when we're in crash-like scenarios and stocks are just selling off like crazy, which is exactly what's happening now, support levels, technical analysis, all that kind of stuff does not matter a whole lot. Right? Once people get scared and are put into a panic and they're just selling assets like crazy, everything just kind of falls apart. So needless to say, for this position, I've definitely stepped in and hedged my put contract here by shorting 100 shares of the stock. So therefore, if this selling just simply continues next week or the week after that, and we just keep crashing and going lower and lower and lower, it's not going to matter for this position or really any of my positions that are hedged with short shares of stock. So that's Airbnb. And then also, as I showed you earlier in this video, let's go back and check on my Roblox position, RBLX. And this trade is actually in even worse shape than where it was on Monday. So now the stock is all the way down to $55 per share. And keep in mind, my position here is a short naked put option at the 80 strike. Or I should say it was initially naked. Now it's a covered put option. So again, I'm still holding 100 shares of the stock short, which is definitely saving my butt on this trade here, because otherwise, if we come over to the trade tab real quick and take a look at the current price of that put option, right now this put is trading for around $2,500 or so, almost $2,600. And given that I initially sold this put option for about $600 as a credit, that means taking the difference between the two. Right now, if I did nothing to defend this trade, I would be down by about $2,000, and that's a lot of money. And same thing again with my SE position. Let's take a look at that real quick. Again, this stock is even lower than where it was on Mondays. So right now, again, with no defense, I would be down by a huge amount on this position. Looking at the price of this contract, with no defense, I would be down by about $4,400 or so. And actually, at this point, I do have short stock paired with all of my positions right now because unfortunately, all my trades do involve put options in some way, whether they are naked puts or strangles or adjustments to naked calls that I've made in the past. So I'm definitely in a pretty unfortunate situation right now, but it is what it is. And at least I'm using my defense mechanics to keep my losses in check as much as possible. So we'll wait and see what happens next week. Perhaps we might finally see a more sustained bounce or sustained recovery in the market because, I mean, at this point, it's basically been 3 or 4 weeks of just straight down price action. But regardless of what happens here, my main objective is to simply manage what I do have on currently, and hopefully by the expiration date in February, if I can make anywhere close to a scratch on all these trades, I will be very, very happy with that. And with that being said, that's going to do it for this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my Skillshare courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.